Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 28th of April. The themes pretty much remain the same. We're getting reverberations from ongoing comments from Trump around tariffs and trade wars. There has been still heightened volatility, although marginally markets have been a bit more stable because there's an apparent easing of conflicts between the two largest economies in the world, namely the US and China. It remains to be seen whether any of these tariffs are dialed back. So in the meantime, investors remain on high alert. It's not been enough so far to repair the damage done to US markets. Indeed, in the year to date, the Dow Jones is still down by 6.9%, the S&P 500 by 8.6%, and the Nasdaq by 13.5%. UK's come slightly back more into favour given its defensive characteristics. In the year to date, the FTSE 100 currently up 2.5%. Turning to next week, it's an extremely busy week, and given the overall uncertainties in the global economy, updates from the UK banks will be keenly looked at. UK banks have had a pretty good year across the board. Just whizzing through them over the last year, share price of Barclays up by 53%, Lloyds 43%, NatWest 67%, HSBC 27%, Standard Chartered 60%. So quite apart from the normal things that we'll be looking out for, such as net interest income, net interest margin, structural hedge returns, any levels of impairments rising, of course, and any further details on shareholder returns, perhaps as was recently the case for the US market when the banks reported, the outlook comments are going to be equally important. Stock specifically, of course, there will be things to look out for Barclays in its US operation. We've seen that deal making and IPOs have pretty much gone down to a trickle, but the US banks had a fairly good time given the market volatility from their trading rooms. Let's see if Barclays had a similar experience with its US unit. For Lloyds, of course, it'll be interesting to hear their outlook given the downward UK consumer sentiment at the moment. NatWest may give us some more update on following its recent AGM statement on the government stake, which is now under 3%, with some aims to reduce that to zero by July. And of course, for Standard Chartered and HSBC, apparently improving fortunes in China, which have been partly responsible for those bumps in their share price, will no doubt be given to us as an update. Elsewhere, there's also quarter one numbers from the likes of AstraZeneca and Glaxo, from BP and Shell, while the Primark owner, Associated British Foods, also has half-year numbers slated for during the week. Thank you for watching. Have a great week.